All right, this is the roundup for a few trades I've taken towards the end of the week last week, which was today. Right now is 12th of August, so it's going to be the trades taken on Thursday and Friday across London session and New York session for German 40. Trying to just do more regular ones here to provide a bit more of the commentary of what I'm thinking when I'm taking the trades and showing like the points of interest and reasoning behind how I've got into some of these positions. So here we are on the first trade. This one here was recorded on the stream. So we can go back and have a look at that if you want on the live stream. So what I had done is I'd planned out this pathway, and it looked like, if I zoom in over here, I'll cover the bits and pieces of it, but like I'd planned this path thinking that this is where price would probably push up out of the London Open, with the Frankfurt Open showing a bit of bullish momentum and the London volume taking that further forward as well. And I was planning shorts. Now I did take a loss first and then I grabbed a winner, and I misjudged how high this was going to go. Okay, so like I got stopped out in the first position, gave it a second chance, and then grabbed some pips on that. Why I was looking for sells was basically from the higher time frames. Looking, everything was looking pretty bearish. Let me just get it to the right. Here we go. And we're stuck in this like range, but we've been showing some bearishness. We had some key indicators towards like CPI, PPI, all those little things that we're going to be waiting on, but stocks had been under pressure. And we were at the top of this, we're closer to the top of the range than we were to the bottom. So I had more points of interest and zones of interest from higher above. And when I push down into let me just replay some of this. When I'm looking at some of the way that German Open, this is the German Open candle, price had pushed down, and I don't want to take sells from down over here. So if price is going to be able to push up, then it would give me an area that I could look for and a price that I'd find attractive to sell from. This little red zone, my first point of interest or zone of interest, if I look at the 30-minute or the 1 hour, it's up to you. You can just see across the board that it was I'll go to the 1 hour and get a little bit more to the left. You can see that we had been getting a few rejections here. So I was holding up a support, a few little wicks into this area, support here again, sort of wick down past into it, clustered around it, and then we pushed down. And this was Thursday week ago. And so we were contained inside of this area, little mini fake out up here, little mini fake out down here. And then Thursday was at this point of time. Okay, so we can see that this is a sensitive area across here. I had a few other little areas of interest as well. You can see that this little doji candle is going to provide some interest to me. And this was a liquidity candle. So like nice bullish engulfing candle followed by a little doji candle. So the tops of this area were going to provide some resistance, basically, that if price can push up, we might see little rejections from the top of that. Fast forward into the actual open. So I took a sell initially so price pushed up. This was 0800 over here. So this is the London Open candles. You can see what happened was there would have been a buy opportunity here, but I didn't see it. But this candle wicked down, broke the low of the previous, this is the hour candle closing, broke the low, and then straight away pushed bullish. Then we pushed up here, up again. So we had nice bullish push for about 25, 30 minutes. And then we had a little rejection candle. This is the first one that I took a little loss on. So I jumped in a little bit too early. After, I think it was around, I'm doing this a bit of retrospect, more or less, I think it was around this area that I got into a sell. And it was looking all right for it initially. And then it just came back up and then just blew past it. So that was all good. That was fine. It took I think it was like a 20 pip loss or something like that on there. And then what we got was a better confirmation. And that one, once we had pushed up into this red zone, deeper into the red zone, up towards the higher, this thin black line where the little doji was. And you can see on the 5-minute price, this is a bit more of a convincing rejection candle, isn't it? So bit better than this one. This one here is still more or less like a doji. And what we know with dojis is that price can often take the low and the high of those doji candles. So what it did is wick down, rejected, pushed up, took the high, and then we rejected properly. Next candle was a 5-minute little doji. Oh, sorry, let me go to the 3-minute. 3-minute, it was this little doji candle. Again, fat body little doji. And where I entered was above here. So it sort of wicked up, pushed that, like it did a little bit like this during the candle, because you got to remember this is a 3-minute candle. And then as it pushed up, pushed down again, came back up, I entered for a sell here. Stop loss was just above this bit here. I'm always looking to target 50 pips where I start to scale out significantly. So that would be more or less what's about here. And that kind of lines up nicely with this pathway, because I literally haven't adjusted this pathway apart from this raising it a little bit higher, because I was expecting it to stop around this area. So once I got into this trade, this one proceeded to drop very nicely. Okay, had another, like, this is a little liquidity grab. If you see this is manipulation, right? We're pulling liquidity, both candles closing within the wicks or under. And usually when I see rejection candles, like 2 of them, like this one and then this one retesting it, normally you see a support break, and that's indeed what it did. So late entry, this would have been anticipation entry. Late entry would have been once we were closing below this support and then following it down. Either way, you would have got good, decent risk reward. Obviously, anticipation entry is going to have higher risk, but you're going to get better reward with it. This is the area where I basically scoured out most of it. You can see price sort of hesitated a bit, had another little pullback, and then we just sold off. Okay. The second trade for this one was based on fundamentals. Okay, so I don't normally trade German 40 in New York session. Normally I'll just take 1 or 2 trades during the London session. But what we had on this day was CPI. Okay, so you see the time here, 1:30 p.m. This is in UK time. 1:30 is over more or less here where I've got this. This is the second trade that I took. This one here was a bit more, wasn't really looking at points of interest or zones of interest, not too much. Like I didn't really see a whole lot apart from I've got the daily low. This is the current daily low at this point. So that was, that is always going to be a point of interest, the daily high, daily low. But more this one, what I took it for was once we got this news, so price was, this was the New York Open candle, this one here, little sell to buy, another little bullish candle. Think about like similar to this one. This was the open of the UK one, took the low, then pushed up, took the low, then pushed up for New York Open. So UK Open, New York Open. So kind of similar behavior between the opens when volume's coming into the market. What we had was, this is the CPI news candle. CPI came out lower than expected. So this is going to be beneficial for business and stocks indices, right? Because lower inflation, maybe the fight with inflation is getting underway. Normally you'll see stocks rally when you see lower inflation numbers because more expendable, less pressure, because inflation is really the key narrative that markets are moving against right now. So this one here, when it came out, I don't like taking breakout trades, and this would have been a breakout trade with that news. Plus, then you've got to deal with slippage and spreads and just general volatility. So I like to let it settle down a little bit. What this candle does, it presents like it's kind of thinning the liquidity to above, and it gives me a definite target when I see a wick like that. It's pulling early buys into the market. And normally when that happens, you'll see an opposite move happen. So you got to wait for that opposite move happen to give you a good price point to enter. Okay, so price wicked up, had like not a really rejection candle, but you're going to just have general volatility with the news. Price then, this is probably pushed over a little bit. So price pushed down, and so you see how quickly it comes down. And this is what often happens if you get into the market too early. Okay, because the news is bullish for stocks, and you're going to see more so bullish for US indices like your Dow, your S&P 500, your NAS. But there's a contagion that what will happen is on US stocks will often happen on like these European stocks will often follow. Okay. So a little bit difference between the FTSE. I've explained that in my study sessions and whatnot because of the strength of the pound, what it might have. But German 40 will usually follow pretty closely to the US stocks. Same with CAC and as well. Okay. So when price pushed down, we took out the daily low and then we formed a support candle. This one's a crucial little piece of information here. So I was a little bit late getting into this trade, but once price had pushed up and broken the high of this candle, this is more or less where I was jumping into it. Okay. And I was pretty comfortable that once we're taking the daily low with this news, we're going to be pushing bullish. So I didn't wait too much for price action. I wasn't really looking for price action for this in this one. When that's the case, I do give myself a bit more margin of error. So I keep my stop loss a bit wider as well. So you can see here is like quite a wide stop loss compared to this one here, which is more or less like 20 pips. This one here is close to the 50 pips. And I'm not really like, end of the day, your job as a trader is just to try and make a profit, right? Risk reward is important, but it's also not the end of the world. So once we had broke up here, took this, and I really thought then we're going to see a decent push. Realistic target, what I was looking for was at least the wick fill. And then if not, make a new daily high. Okay, so my target was where I'm going to scale out. I'm always happy with 50 pips. So I'm always going to scale at 50 pips. Target for this one was closer to 100 pips. And that was just where I set the take profit just to let it do its thing. So you can see if we play it forward, price then, just fairly steadily just pushed up. We've got NYSE, New York Stock Exchange, open on this candle. And this is where that second batch of volume comes in. So you can see it just keeps on, blows past the target. And that was like a really, really beautiful trade. So that's the end of that trading day. I took three trades there. First little loss in here, 20 pips. And then I took a good winner and then a sells and then a good win for buys. When this initial move with CPI closed, look at the 4-hour candle. Okay. So 4-hour candle. Oh, did I just do something? Out of the thick black line. There we go. When this candle closed, what we've done is we've created a liquidity candle as well. Nice bullish, bearish, nice bullish engulfing candle. So this is going to lead into information that I'm looking for the next day, right? So we've got one candle. We had a nice bottom wick, closed bullish, followed by a second one, which is kind of retesting this one and sweeping the liquidity below this doji. This now is a zone of interest for the following day, okay? What happens overnight, it doesn't really matter. We can see the next 4-hour candle push down quite significantly, okay? And basically it's just set, for me, what I'm thinking is I'm just trying to anticipate an easy move. And this is one that's setting up for, it's bringing price back down to an area that I quite like to buy from, okay? So let me just go forward hours. I'll bring back my drawings. I'll remove this one now because that was a fundamental driven move. This one here was a price action and range bound move. Reasoning why I was looking for those ones. Now this candle, I'm going to put a box around it, around the wick, because this is going to lead into the next trade that I took on Friday. After CPI, we can often get like a fairly sluggish day, and we indeed did get that at the start. So this is the 6 o'clock. So this is like Tokyo close candle. This one here is your Frankfurt open candle. And what I was looking for, I was hoping to get a trade early on, but when I was doing the stream on the Friday, it was just so dead. So I ended up calling it after an hour, and I was just going to wait for it to get to a zone of interest of mine, which was basically this 4-hour wick area. So I'll go through and show you, like, apart from the initial 15 minutes of the open, okay, we watch and see like just how sideways it really got. So just, barely any volatility. So not really worth waiting. I think I ended the stream more or less around here when we started to. Oh no, I think it was maybe after this one. I think one of the guys got a sell in here. I was more looking for buys. And I had to wait. Like, there's just no reason for me to look for trades in here. So we eventually did get some movement after I'd finished the stream. You see down this little red area. So this was my area that I was thinking for buys from. Finally got like a little bit of a rejection. Okay. So after taking the zone of interest, where I got in is after I had like a few of these like little liquidity candles retesting each other. So let me show you what happened. So you can see we've got the first one over here. Here's a nice one. Then price pushed down lower again. What I want to do is see like a consecutive, like two retesting each other. So price range for a little bit up and down. We've got the first one here. Okay, little rejection, very low time frame. So that's why I'm not going to jump in after just one. And price often, when it hits a point of interest, the least probable outcome is when it does like a V shape like that. Normally what it does, you'll find it will do a few tests. So don't need to be hasty to get into these, because often if you're expecting something like this, you'll get into the move, price will move up in your favor for a little bit. You move your stop to break even, comes down, stops you out, and then goes to your target, or maybe stops you out twice and then moves to your target. So you don't need to take the first bounce, right? So think about this pattern, and how this pattern starts is usually when you start seeing little rejection wicks, price leaving wicks behind, and like when you see wicks being filled to the upside and leaving left behind underneath, generally then what's going to happen is that resistance will break. Okay, so that was the first one here. Let's skip forward. You see another little tiny one, little bullish candle, little lower wick, closes bullish, price pushes up again, and then I get a third one here. Okay, so where I entered after we got the third one, I entered after that one, my actual entry price 15,880. Stop loss was underneath these guys, because like if this is my support, like this is support being created. So for me that's support. Now, if we get something that closes underneath here, then I'll just have to close my trade because that's no longer support. Okay, so where I'm looking to target 50 pips, that's going to put it here, 15,930 from here. I had points of interest along here as well. You can see this candle here was no top wick. If I go to a higher time frame, say like the 5 minutes, that's the same one. This is when we really started getting that sell off. So this area, I was hoping it was going to go higher, but that was going to be a target. Because it was sort of late move on Friday, I'm always going to be happy with 50 pips, which would be here, 50.6. Okay. At that point, I'll pretty much close most of the trade, just leave the tiniest little piece running. Go to the 3 minute and we'll just watch it play out. So we had the manipulation from below. Okay. Multiple little tests on the 1 minutes. When I see that, generally I see a resistance break, jump in afterwards. Not got a clear area for my stop loss because that's where the support is being created. Price comes down, retest it, but I've got nothing to worry about until we close below. Now we start pushing up, do a little wick fill. Okay. Once we break above this wick, we're all good. We've got clean candles to the left. This is now like an A+ setup. Price pushes up. This is the point where I closed pretty much 95% of the trade, leave the rest to run. I was hoping that we were going to see that follow through and just keep on pushing up, but keep your eye on what happens at the top here. So see this right here. This is where it taps into that no wick candle, the no wick candle, which was present on the 5 minute. Okay, right here. And you can see as soon as it touches it, keep your eye out for these no wick candles. Here's another no wick candle. You can see that once we took the high of the no wick candle, we had like a little reaction. Same thing goes for opposite, like down below. If it was no bottom wick, be careful of those because there's usually liquidity that created that imbalance, which pushed price down quite quickly. So at that point, I was 70 pips up for the tiny little piece of a runner. Wasn't too worried about it being on a Friday. I just left it to go, and it just ended up selling off with PPI that came through. So there were the 3 trades. 1 loss, 3 wins for Thursday and Friday for Gemma 40. Hope it helps with your trade idea creation. I'll see you guys in the stream.